How to find your property assessment ratio. Imagine trying to figure out how much of your property's value is used to calculate your taxes. That's what the assessment ratio helps you understand. It's a simple way to see if your property is assessed fairly compared to its market value. First, you need to know two key numbers. The assessed value is what your local assessor has put on your property for tax purposes. You can find this on your property tax bill or assessment notice. The market value is what your property could sell for in the open market. You might get this from recent sales of similar homes, a professional appraisal, or sometimes from the assessor's office. Once you have these two numbers, calculating the assessment ratio is straightforward. You divide the assessed value by the market value, then multiply that number by 100 to get a percentage. For example, if your assessed value is $60,000 and your market value is $100,000, your assessment ratio is 60%. Many areas publish an official assessment ratio or level of assessment. This ratio shows how assessments compare to actual market values across the neighborhood or city. For instance, some places assess residential properties at 6% of their market value. Commercial properties might be assessed at 45%. These ratios help keep assessments consistent and fair. Some states or counties also use a common level ratio or equalization ratio. This is a number that makes sure assessments are uniform and reflected current market conditions. You can find this ratio from the State Department of Revenue or Tax Board. It's useful if you want to double-check your assessment or see if it lines up with the area's standards. To get the official assessment ratio for your property, contact your local assessor's office or tax authority. They can tell you what ratio applies to your property type and area. They can also explain how it was calculated and how it affects your taxes. Knowing your assessment ratio helps you understand how much of your property's value is being taxed. If your ratio is much higher than the official one, your property might be overassessed, which could mean paying more than you should. If it's lower, you might have a case to appeal your assessment. In short, finding your property assessment ratio involves comparing your assessed value to your market value, checking local or state ratios, and talking to your assessor's office for the most accurate information. This ratio is a key piece of the puzzle when it comes to understanding your property taxes and making sure they are fair.